Multifamily Mindset
podcast. Think bigger.
Welcome back to the Multifamily Mindset podcast. I am your host, Zach Rucker, co-founder of Black Cedar Investments and coach here at the Multifamily Mindset. Today's episode is the Multifamily Minute, the MF Minute. I'm excited to dive in today. It's going to be a quick tip, trick, actionable that you can use in your business today. And this one is one that I get asked, this question I get asked almost on the daily. And that's, how can I underwrite faster? Where's the quick method? This takes me too long to use a financial model, the underwriting template. It takes too long. It takes me hours. It takes my whole evening up to underwrite one deal. And I'm supposed to be going through hundreds of deals. I don't have the time to do that. How am I going to do this? This is where people start to stress out and they want the quick method. Well, let me give you the short answer. There's no quick shortcut to underwriting deals fully. However, there are checkpoints that we can put into place to filter deals to save us that time. So you're not spending a whole evening to figure out a deal doesn't work. We can shorten that up and you could get it done in 10 minutes with this first checkpoint. So what is it? It's the quick and dirty underwriting, or I like to call it a fair market value assessment. So what does this do? It's a quick calculation to compare the asking price to market rates and to adjusted expenses. How can you use this quick and dirty fair market value assessment to your advantage? First, it's saving you hours of time wasted on deals that don't work. And two, it allows you to get back to the broker as quickly as possible. How quickly should you respond to a deal that a broker sent you? Really, you should go as soon as possible. But if you can do it within 24 to 48 hours, that's going to put you ahead of the game. So what does this do for you by getting back within 24 or 48 hours? It builds your credibility. First, it builds your credibility by being quick. Second, it opens the door for further and easier communication with the broker. Because the first one of building your credibility by being quick, the broker sees that you're knowledgeable, you're looking at this, you're giving back with feedback. That opens that door up and you can start having those conversations quickly and consistently. And third, it buys you time to dive in deeper if needed. If it passes this checkpoint, it gives you that time to dive in deeper while you're waiting on the broker to give you some responses. Let's dive into the calculations of that. So listen in intently. I'm going to go through the calculations so you can understand how you can implement this quick and dirty right now. Part one is understanding the seller and the seller's situation, the seller's numbers. So we're going to need to take the seller's gross income, subtract it by the expenses, and that's going to give you your net operating income, right? Your NOI. Second is take that NOI, divide it by the market cap rate, which you should find out from the broker or multiple brokers in that market. And that's going to give you your market rate purchase price. So what does the market rate purchase price mean? That's based on the NOI of how the property is currently performing and the average or the market cap rate. So based on that, it's going to give you this purchase price according to the market. Now, next step is to take that same NOI and divide it by the asking price or the whisper price that you got from the broker. And that's going to equal what your purchase cap rate is. And we're going to use that a little bit later. So hang on to those items right there. Part two is the adjusted expenses. So you're going to take the seller's gross income, subtract it by an expense ratio. So we're gonna create our own expenses. So let's say this property that we're looking at is about 40% expenses or 60% expenses, right? It's one of those. We want to adjust that to what we think we can operate the property at. Typically, a rule of thumb is 50% expense ratio. That's going to depend on the size of the property and the market. So do your research, do your due diligence, understand that. But rule of thumb, we're going to take 50% expenses. That's going to give us our adjusted NOI. Take that adjusted NOI and divide it by the market cap rate. kind of like we did in part 1. That's going to give you your adjusted purchase price. So from here, we can compare the 3 purchase price, or the 3 prices, the asking price or the whisper price with the market rate price, and now our adjusted purchase price. All right, we can compare those and see where they fall and how close they are to each other. Are they way off? Are they kind of in line? And what I typically do is I take that adjusted purchase price, and that's the number I go back with the broker of initial sizing, right? And I'll say to the broker, I'll send an email or call them, said, thanks for sending over the deal. I took a look at it. Here's a couple of things that I found in the deal. Maybe I looked at the T12, found some expenses that were off. I adjusted my expenses, and based on the market cap rate that you gave me or that I've done my research on, this is the initial price I can come in on, right? They might be asking 13 million. I'm coming in at 10 million. I'm going to take that number and go to the broker and say that, and then ask maybe a couple questions on that. Hey, can we get on a call? Can you explain to me why you're at 13 million? So this should take you 10 minutes or less to go through this calculation and write up that email and get back to the broker, which should allow you to get back to the broker within 24 to 48 hours easily. If not, if you get a deal in your inbox and you're right there when it comes through, you can get back to the broker within 10 minutes. So hopefully that helped you today to implement this into your business as a checkpoint. Right? This doesn't solve the whole issue of underwriting, but this gives you a checkpoint to get back to the broker, to get ahead of the game, and to create a better relationship with that broker, and to just get through more deals. Maybe the purchase price is way off. They're asking 13, you're at 8 million. You go back to the broker, this is where I'm at. Okay, it's just not going to work. Let's move on to the next one. And you can filter through the deals a lot quicker. So I hope that helps you guys. Please reach out if you have questions or feedback. We have a survey in the show notes. We'd love to hear from you guys and get any feedback if this helped you or if it didn't. And reach out. With that, please share this if you found it helpful and leave us a review. We appreciate it, and it helps us reach more people as well. With that, have an awesome weekend, and we will see you next week.
Multifamily Mindset.
Podcast. Think bigger.